Hey guys,
What's going
Morning.
on, guys?
happy sip day.
Happy sip day.
Rainy sip day. You can't see outside our windows, but rainy, dreary.
I know my arc's almost done. I'm gonna be sailing off here soon.
Perfect day to talk about when to start financial planning on a rainy day. Everybody's first thought. So,
Yeah.
what do you guys think? What makes up a financial plan and when do you start?
You want to start, Joe, or you want me to? Or
Go for it.
oh man. So when do you start? I feel like that is the $1 million question of when you start financial planning, because I feel like we have a ton of people come to us, and some people don't start until their 40s or 50s or 60s, and some people start in their 20s or 30s even. And I feel like there's really no correct answer, but I mean the preferred answer is probably sooner rather than later. 20s or 30s, you kind of start really thinking about, okay, what are my goals? If you're getting out of college, or if you're in your early stages of your career, what are your goals? Do you want to try to buy a house? Are you going to rent for a little while? What do those different cash flows look like? Um, when you're getting out of college, same thing. Will you be getting a job in the field that you studied? Will you be trying something different? What will your savings look like we actually, Joe and I had a client reach out to us the other day. She actually just graduated college,
Mm,
and she reached out saying, I'm very excited. I'm getting my first big girl job, and I got all these benefits questions. How do I start? Where do I start? What do I look at? And I feel like that
right.
is so, first of all, I feel like that's a huge benefit that not like we can offer not only our clients, but like our clients' kids and everything, which is
Hmm.
really cool. I actually was telling my wife the other day, I wish when I graduated college, I had some actual financial advisors I could reach out to besides Google. And so it's a cool concept. So I think it's really, it's good that she's thinking about those things. She was asking about her 401k, talking about the matching percentage, how to allocate that, how much she should put into it, if there's other places she should put it besides the 401k. So she had really good questions. And I feel like to start thinking about those things once you get out of college is just a huge head start, a huge benefit. Um, and everyone's financial plan at different points in their life is going to look different. I mean, for her, those are great questions. Those are things she's going to be thinking about. For someone who's maybe in their late 20s, early 30s, it's going to be, okay, do I want to stop renting? Do I want to try to buy a house?
Right.
I, I just got married. You know, do I want to start planning for kids? What's that financially going to look like once you have kids? Do I want to start saving for college now? Do I want to like open up once kids get a little older? Do you want to start opening up Roth IRAs and funding them a little bit here and there once they get summer jobs? Just it's different for everybody, but the sooner you start thinking about that, I feel like makes a huge difference.
Yeah. Joe, I'm curious
Uh,
your thoughts.
I get a good points from Tucker. I could go two directions. One, I would make the direction earlier. I mean, my kids have a piggy bank and it has four parts of the piggy bank. One is save, one is spend, one is invest, and one is donate. So I would argue that my 5-year-old has a financial plan if he's got a piggy bank with these four things. Really doesn't change that much as you get older. I think maybe one category that gets added is O, like mortgages, debt, those type of things. But the building blocks of that, we're starting in our house with 3 and 4 year olds of that conversation. I think that the other end of that is like, when do people typically start with a financial advisor of doing that? And that could be anybody on the planet because everyone, even Jeff Bezos, has, potentially unlimited objectives with a limited amount of resources. So what we're trying to identify is, okay, what objectives are the most important? And then given your resources, how can we accomplish those objectives? So
Right.
generally, we're not onboarding 5-year-olds as clients. That's not really who we're working with doing that. Um, so it's usually somebody that's coming to us and saying, okay, I got all these different accounts. I got insurance policies. I got I've been doing these. I got tax returns and stuff. I got employer stock. I got all these different pieces, and then here's some things that I want to do or accomplish. So then we're trying to take that puzzle and put it together to say, okay, there's potentially unlimited objectives for everyone, walking the planet, unlimited objectives with limited resources. Again,
Right.
even the wealthiest people in the world, limited resources on what they can accomplish. So I could argue that we start that with 5 year olds, just the understanding of, hey, money is a tool and it can be used as a tool to accomplish objectives.
Hmm.
It really doesn't change that much when you're talking to a 45-year old. It's the same thing. It's maybe life's more complicated, but it's still fundamentally, okay, money's a tool. How are we going to use it to accomplish whatever objectives you're trying to accomplish?
Yeah. So it sounds like it's like a bucketed approach, right? There's different levels for different folks at different times, at different stages of life that happen all over the
Yeah.
place.
Somebody's in my email inbox this morning talking about, I'm going to reduce retirement savings because we really want to buy a boat. It's like, well, if you're going to ask me if that's a good financial decision, probably not, but we call it personal finance for a reason. Like there's
Yeah.
personal parts of that. And if you're going to prioritize, hey, we're healthy, we're young, we live in the water, we want to get this new boat because we want to make some memories and do this, that's going to come at the cost of saving more financially, but that still might be the right decision in your financial plan to say, hey, we're going to buy a boat
Mhm.
and we're going to reduce retirement savings. So, really our role is to just work with people as a thinking partner as they make, those decisions in their life about, okay, unlimited potential objectives, limited resources. How do we think about those decisions? And oftentimes it's like this, the two spouses might not even be on the same page. So we're trying to kind of talk through them in a conversation about like, what is the most important thing for you? Is it maximum financial security in your 70s and 60s? Or is it, hey, we're 50 and we want to go do this thing, have this fun, take this trip, buy this boat? That's a conversation that we very commonly have with clients.
So a little bit of therapy and a little bit of personal finance all together, bundled up.
Yeah, I mean, really, how many people do you talk to about money? It's
Right.
kind of the last taboo that many people have of they're not even with their closest friends or even their siblings like talking about money with them.
Hmm.
Mhm.
So it's very common for us to be in those conversations about like how they think about their relationship with money and how they're using it to develop a financial plan to meet what objectives they've determined are the most important to them.
And what I heard you say was key of like thinking partner, right? We're not driving the ship for you. We're not making the decisions of what's most important to you or your family or those things. We're here to bounce the ideas off of and give response backed up with data, you know, all sorts of other examples we've worked with or similar families, et cetera, et cetera. So I agree. Can't can never start too young, and you'll know when it's the right time for you based on your situation. Awesome.
Absolutely.
All right, time to go back to the rain.
Oh, well, wear your jacket.
Bye,
Hey,
guys.
Katie.